is so much fear, panic, uncertainty in the cryptocurrency markets at the moment. Every time I open X and scroll through crypto Twitter, there's bear posts. People are panicking, selling their bags, saying that the cycle top is in, that our altcoins are going to zero. There's absolute fear, blood in the streets. People don't know what to do next. There's so much uncertainty. How on earth are we to know what to do with our hard-earned investments? Well, we're going to take a little look at the charts today, see what they're telling us, have a little look at some of the news, what's happening in the world around us, seeing what some of the whales are doing, and having a look at some on-chain indicators to see what our next move might be. Is the top in? Do we need to run for the hills, or have we still got some legs left in us in this bull market cycle? Taking a look at the Bitcoin versus USD chart just here, you can see that we've been following this for quite some time. We've got some technical analysis right the way through the bear market period. You can see that we've got our cup and handle just here, followed by the descending channel of the handle through to the breakout. We then had a descending or an ascending channel, which is usually a bear flag where we break down. We then had a descending wedge, which usually you have a breakout up of. What's next? Let's have a little look, take our time frame down a little bit from the weekly chart, and let's get a little bit of a better view on it just here. So you can see here, what I'm noticing taking a look at the Bitcoin USD chart is that we've got a double bottom pattern just here. We did have this massive liquidation flush. You can see this Darth Maul candle just here, where we didn't know what was going to happen this day. It was quite a scary day in the cryptocurrency markets. I'm sure you'll remember it, the Monday the 13th of January. Since then, what am I seeing? Well, if we take a little look, starting at the end of this trend, what I'm noticing here is that we have a lot of touch points along this trend line. We're kind of respecting it quite well. Maybe we'll take it from here. And what I've also noticed, even looking right away across back to December last year, we've really struggled to break through this area and sustain it, so the $106,000 mark. So I'm going to draw a little arrow across just here. You can see that we are forming this triangle pattern. Taking a look at this is an ascending triangle pattern. And what does that typically mean for us? Well, an ascending triangle pattern typically means that we are about to break out to the upside. You can see here that every time the price is coming up into this level, around $106,000 up to $109,000 level, you can see that there are a lot of short sellers just here. However, every time that we press our price up into this region, we're liquidating more and more short positions. The bears are now starting to lose steam a little bit. You can see that the price isn't rejecting and isn't coming down as much anymore, which to me indicates that the next time that we break through this level might be the last time that we break through this level for quite some time. What I imagine might happen here is that we break out to the upside, and we find ourselves maybe retesting back down to here again before the next big leg up through into February. That would not surprise me in the slightest. You can see that actually corresponds quite nicely with some macroeconomic news. You can see that we've got this week durable goods orders, not really a massive one. However, what we do have that is huge this week on the 29th, we have the federal interest rate decision. We are expecting a hold of 4.5% on the federal interest rate. I reckon if we get that, or even if we get a 25 basis point cut, I reckon that is extremely bullish for our bags. Unless there's a surprise hike, the price a hold is already priced into the market. That would not come as a surprise. It shouldn't be too bearish news. If anything, it just gives us certainty. And actually, we don't have any more federal interest rate decisions until March, so we have quite some way to go until the next federal interest rate decision. You can see we've also got GDP growth quarter over quarter, and the core PCE, the core price index, coming on the 31st. So it's going to be quite a big week in the cryptocurrency markets whenever it comes to a macroeconomic news perspective. If there's no surprises over the next week, I think that could be just give enough reassurance to the bulls in the market that they can unload more capital into the markets, and we could see a really significant press up higher from here. What I've also noticed, actually taking a look at some of our altcoins, that there's some really interesting patterns developing on some of these as well. If we take a look at the Ethereum chart, you can see we are forming another triangle pattern just here, or it's actually a bit more of a flag pattern. Well, you can see depends how you want to look at it, but we are really retesting this trend line just here. It looks like Ethereum could be ready for a breakout at any moment now. And taking a look at what that might mean for the altcoin markets, if I take a look at the Bitcoin versus Ethereum chart, we're going to go on to the weekly chart on this one. I noticed something really interesting here. So Ethereum typically leads the way for alt seasons. And what I've noticed just here, taking a look at the price, you can see that we are moving much more into a Bitcoin dominant market versus Ethereum. We have been for multi-years now. You can see right the way back to these lows back in 22. We've consistently been seeing Bitcoin growing in dominance over Ethereum. What I've noticed whenever I put up the RSI down here is that we've got some divergence. So you can see the price is increasing, or the dominance of Bitcoin versus Ethereum is increasing here. However, the relative strength on the RSI is decreasing. If we take a look at our divergence cheat sheet, you'll see that actually this higher high versus lower high structure, whenever it comes to the RSI, is typically a bearish pattern, which might mean that we're ready for a breakout in the Ethereum charts. I know, hard to believe, Ethereum has been really struggling for quite some time now. However, if we are able to, in fact, actually I've just noticed it on this chart as well, we've got a nice cup pattern and a handle here, similar to what we had on the Bitcoin charts last year. And we saw that massive push up from Bitcoin out of that cup and handle pattern. We could be in for the same with Ethereum in the not too distant future, which again, Ethereum typically leads the way into the altcoin market. Again, it's been feeling so bearish for a long time for Bitcoin. It's always good, I think, to take a step back and look and see what the bull or what the whales in the market are actually doing. If we take a look at the Bitcoin ETF flows, you can see that over the last week or so, BlackRock, the world's largest asset management company, have been buying heavily, heavily. You can see multi-billions they've been putting into the Bitcoin ETF. You can see that we've had half a million day here, a 660 million day here, consistently buying over the last couple of weeks. You can see billions being put in. The same with Fidelity, huge purchase from them, much more than their average, over 3 times greater than their average purchase on the 24th of Friday, just there. Again, ARK with a massive day as well, 168 million versus their average 11 million buy. This is significant for, and actually you can see the leak out of the Grayscale GBTC fund. This is the one with the extremely high fee that they take on it, is starting to slow a little bit. They're no longer selling 80 odd million a day. The flows are slowly starting to drop out of there. This is putting tremendous supply and demand pressure on the markets. If the biggest asset managers in the world and some of the biggest names, Larry Fink, Kathy Wood from ARK, buying some of these, buying these ETFs and selling them to their clients at such high rates, supply is dropping. Demand is really increasing, as we can see. That typically only means one thing for the price, and that means that the price has to go up to accommodate for the decrease in supply and the increase in demand. You can see as well that Donald Trump has taken office this week, and already, this is a few days out of date now, but you can see within a couple of days of him taking office, he did some significant things to help stimulate the cryptocurrency industry. You can see Ross Ulbricht was freed. He was the founder of Silk Road, one of the first online cryptocurrency companies. He promised as part of his campaign that he was going to free Ross as a signal of his commitment to supporting the cryptocurrency industry. Ross was a bit of an icon, or someone to look up to for a lot of early adopters in the cryptocurrency industries, and he did indeed give Ross a full pardon, which was just a way of, I guess, Donald showing that he is a man of his word and that he's going to live out what he said in his campaign. He also repealed a very controversial accounting standard which prohibited banks from really custodying or supporting cryptocurrency for their clients. And now that that has been repealed, the banks are free to get involved in this game. They can start to come out with all sorts of cryptocurrency related products. They can custody Bitcoin, other digital assets. Again, really exciting that now not just the asset managers are involved, but also the banks. I know that brings a bit more centralization into it, but ultimately to pump our bags, we need the biggest, most wealthy companies in the world to be in this industry. So for me, it is definitely a good thing. He also established the digital asset stockpile, not just a Bitcoin stockpile, but a digital asset stockpile. And he has indicated, or his family have indicated, that they might hold some altcoins, especially US-made altcoins, in the stockpile as well for the US. Actually, off the back of this, I saw that he had organized a conversation with Nayib Bukele, the president of El Salvador, obviously a very pro-Bitcoin country. So who knows what that conversation was about, but likely something to do with custodying Bitcoin for a country. Operation Choke Point has been ended. That was Biden and Harris's campaign against cryptocurrency to try and stifle the industry and shut it down. It was called Operation Choke Point. That has been ended. He's also promised and signed off an executive order saying no central bank digital currencies. Again, it stops large institutes like banks creating their own cryptocurrencies that would really disrupt the free nature of the markets and ensure continuous decentralization of the industry, which again is massively important for our bags. Gary Gensler melted, has resigned from office. We're getting a very pro cryptocurrency SEC now, Securities and Exchange Committee, and also we've got a whole digital assets subcommittee chaired by Senator Loomis from Wyoming, who is a massive cryptocurrency bill. So as you can see, there's just been so much done, so much positive, so much bullish things happened in the industry over the last couple of days. We also had Trump dropping his meme coin, which who saw that one coming? And then again today, one of his sons, his trusted advisors, almost his son seems to be, have come out and said that there will soon be no capital gains tax in the US for US based crypto projects, which is just a game changer. That takes this to a different level. All sorts of different investors are going to be getting involved in the industry who never have before, because they can have the opportunity to invest without having the need to pay significant capital gains tax on whatever they make. So it really does change the landscape entirely for US based cryptocurrencies. I certainly hope the UK follows suit on this one. And not only that, but World Liberty Fi, this is the Trump's DeFi project. You can see they've been heavily buying different cryptocurrencies. You can see, well, huge amounts of wrapped Bitcoin, got Ethereum, Tron, Aave, Link. They are really going all out on cryptocurrency. I think now over half of Donald Trump's net worth is in cryptocurrency, which is just huge. If you think you've got the most powerful person on the planet investing so heavily, dropping their own meme coin, that is hugely significant news. The price might not have reflected that over the last couple of days, but I'm confident that whenever all of these things compound and they have had some time to take effect, that the price is only going in one direction. I predict that is upwards. If we take a look at some of the on-chain indicators as well, because so many people have been calling for the top, saying this is it, not one of our reliable indicators is actually suggesting that this is the top. You know, it could be. I'm not a mystic. I'm not Nostradamus. This is also just my opinion. I'm not a financial advisor. This is not financial advice. The top very well could be in. This could be it. I would be so surprised though, because not one of our indicators has said that. If we take a look again at the Pi cycle top indicator, which is reliably predicted the top of each of the previous bull markets, you can see what happens is whenever these two lines overlap, the green line here overlaps with the pink line, that typically indicates the top of the bull market. You can see that we are, whilst trending closer together, we're still nowhere near overlapping, which to me indicates that there's still a significant amount to go in this market. We also have some other indicators as well, on-chain indicators. The MVRVZ score is another really reliable one. You can see whenever this typically spikes up over 6.5, that is indicated at the top of the market, and we are currently sitting just under 3. So again, we are nowhere near that 6.5 level. And actually what I noticed as well is if we take a look back to the last proper bull market back in 2020 to 2021, you can see that we kind of stalled out at a similar level and had a little bit of a correction in the MVRVZ score just here before we rocketed up over that 6.5 level. It wasn't as significant a pullback as this one. However, it's not dissimilar as to what has happened in the past. You can see once we broke out of this, we started rocketing up. We went up so quickly from the end of the year, January, and start of January, end of December, January, and into February, March, April, yeah, some massive price movement very quickly once we saw this going up. So again, we could be in for something very similar next time or this time coming. Some other indicators as well. The RSI, the Relative Strength Index, you can see that whilst the peaks tend to be decreasing a little bit each cycle, we're still at a very healthy level here, just at what, 77. So we are not up over 80, which is where we would typically expect to see a top, some sort of a blow off top. So we're still at a relatively healthy RSI. There's a lot more that we could go through here. One other one that I quite like as well actually is the rainbow charts. It's quite controversial. Not everybody is a fan of it. However, if I can find it just here, let me have a quick look because it is an interesting one. I think it's worth us having a look at. Maybe if I press this one, there you go, the Bitcoin rainbow chart. You can see that typically whenever we peak out, it tends to be in and around the top of the orange, sometimes even into the red. If we take a look here, you'll see that we are still firmly in the green. So if we were to come up to the orange, you're talking somewhere between $178,000 per coin up to 250 at a push. So it's still a long way off getting towards these bands on the rainbow chart. So not only that, but you're seeing relatively healthy fear and greed index too. If we take a look back a couple of months ago, we were up in the 90s for the fear and greed, or high 80s. And at the moment, we have cooled right the way back down again. We've spent some time actually in the fear and firmly in the fear. We're back in a fairly modest area for a bull market. 61 was, it says greed. That's not overly greedy for a bull market from what my experience is. So again, we're actually at relatively healthy levels. And one more as well, actually, if we take a look at the funding rate heat map, you can see actually that a lot of projects right here are not over leveraged. You can see what typically happens whenever people are getting carried away with the markets is that we start to see these maps heat up. Lots of leverage is brought into the market, and that's whenever typically things get a little bit frothy. It can be a bit of an indicator that people have got overly greedy and that the run might be over. But at the moment, you can see that we are at very, very healthy levels of leverage on the funding rate heat map too. So for me, taking a look at everything, there's so much bullish macro news. The price action is looking incredibly healthy. So for me, I'm trying to spend as little time as possible on crypto Twitter at the moment. Everybody just seems to be bear posting, which is kind of spiraling and causing other people to start questioning their decisions. For me, I've got confidence in my bags. I've got confidence in the on-chain indicators, the charts, the news, what is happening with the whales in the industry, those leading the biggest, most powerful countries in the world. For me, I'm going to continue holding my bags and seeing where the next leg takes us. But that's all for now. If you've learned something, I would love it if you could please leave a like, subscribe, give me a comment, tell me what your thoughts on the market are. I would love any sort of engagement off the back of this. But for now, again, thanks so much for watching. And until next time, we'll see you then.